Hyundai Motor India has officially entered the commercial mobility segment with the launch of its dedicated Prime Taxi range. This move is specifically designed to empower fleet operators and taxi entrepreneurs with reliable, purpose-built vehicles. The lineup features two models: the Prime HB hatchback, starting at $599,900, and the Prime SD sedan, starting at $689,900. Both are powered by a 1.2-liter Kappa engine, available in both petrol and CNG variants, ensuring flexibility for high-usage city driving. Accessibility is key, with flexible finance tenures of up to 72 months. On the market front, Hyundai Motor India shares settled slightly lower today at 2,300.90, down about 0.88%. This launch marks a strategic shift for Hyundai into the high-volume commercial space. What do you think of Hyundai's entry into the taxi market? Let us know in the comments. After a volatile 2025, the outlook for 2026 is looking significantly more bullish. Here are the top 10 takeaways from the latest brokerage reports. Coming to next Indian Market Outlook 2026, brokerage targets. Morgan Stanley is leading the charge with a massive bull case target of 7,000 for the Sensex, implying a 26% upside from current levels. Nifty targets. Kotak Securities is even more aggressive in its bull case, projecting the Nifty to hit 32,032, a potential 23.5% rally. Base case consensus. Most global banks, including Goldman Sachs, Nomura, and HSBC, have converged on a base case growth of 11% to 13%, targeting the Nifty at 29,000 plus. Foreign investor positioning is currently at its lightest in history, creating a massive bedrock for a multi-year rebound as they return. Valuation reset. After 14 months of underperformance, India's valuation premium has finally normalized, offering a much more reasonable entry point. Earnings. Recovery. A renewed corporate earnings cycle and policy easing are expected to be the primary fuel for this breakout. Domestic strength. Despite foreign outflows in 2025, domestic fund flows remain structurally strong, providing a safety net for the indices. Sector picks. Brokerages are turning overweight on discretionary consumption, industrials, and healthcare for the coming year. 2025. Context. Remember, we are coming off a year where the Sensex gained 8% and Nifty 9%. 2026 is widely expected to be the year we see a major breakout above these levels. Next in the focus today is Ajanta Pharma closed today at 2,715. Up nearly 1%, after Motilal Oswal highlighted big upside from its new weight loss drug opportunity. Ajanta has tied up with Biocon to source semaglutide, one of the world's most talked about obesity drugs. Motilal Oswal estimates potential annual sales of $25–30 million from FY28 in Asia and Africa, with very high EBITDA margins of 50–55%. Overall, they expect Ajanta's revenues to grow 11% and profits 16% CAGR over FY26-28, and have reiterated a buy with a target price of 3,145, implying about 17% upside from current levels. This partnership gives Ajanta an asset-light way to ride the global weight loss theme without taking manufacturing risk. Next sector to discuss. On December 30, the Nifty Auto Index climbed over 1% to 27,889, snapping a 3-day losing streak, with Maruti Suzuki hitting a fresh all-time high intraday. The move is driven by expectations of strong December auto sales. Brokerage Nuvama sees double-digit year-on-year volume growth across categories, supported by lower GST, better affordability, new product launches, interest rate cuts, and easy financing. Exports are also expected to grow in double digits, led by Asia, Africa, and Latin America. Strong IIP data added fuel. India's industrial production jumped 6.7% in November, a 25-month high, with manufacturing up 8%, signaling a broad-based recovery. These upcoming auto sales numbers will be a key test of how sustainable India's consumption boom really is. Main important. On the F&O expiry day, markets were extremely choppy, but finally closed almost flat. The Sensex ended at 84,675, down just 20 points, and the Nifty closed at 25,939, down only 3 points. If you look at the chart on screen, you'll see a doji candle right at support that signals indecision and a possible turning point for the short term. Despite the flat close, action under the surface was interesting. Metals rallied over 2%, PSU banks were up nearly 2%, and autos gained about 1%. On the other hand, IT, realty, and healthcare came under pressure and ended in the red. This volatility was driven by three things: caution ahead of the U.S. Fed minutes, FII selling in thin year-end volumes, and portfolio rebalancing plus index changes as we head into 2026. Technically, key support sits in the 25,850-25,800 zone on Nifty, while resistance is clustered around 26,000-26,100. A decisive break below support could extend the correction, but a bounce from this doji zone may set up a near-term reversal. For now, the market is clearly in wait-and-watch mode. Let's wait for 2026.